Hello everyone, it's Wednesday, July 8, and today we will review the charts for the euro and the British pound to identify potential market trends. As you can see, both currencies have lost ground against the US dollar, with attempts to reach a new one-week low falling short. This weakness is primarily not due to yesterday's fundamentals, specifically a sharp rise in the US trade deficit, but rather the developments in the Middle East. The American military launched strikes against Iran in response to attacks on 3 oil tankers in the Strait of Hormuz, viewing Tehran's actions as attempts to disrupt peace talks. Given that this attack was the most significant since the initiation of a 60-day memorandum of understanding to cease hostilities, we're witnessing increased demand for the US dollar as a safe haven asset. This demand has contributed to a sharp rise in oil prices and a drop in gold prices. While the situation in the Middle East appears to be stabilizing, such military strikes and heightened tensions complicate matters. As of now, the situation has not escalated into aggressive actions. Both sides have exchanged attacks, resulting in markets remaining cautious and hesitant to dismiss the Middle East issue. Now, let's take a look at today's macroeconomic calendar. It does not feature any significant news releases from the euro area, aside from speeches by German Bundesbank President Joachim Nagel and ECB board member Isabel Schnabel. In the US, traders may pay attention to data on wholesale inventories and EIA crude oil stocks. However, the key focus will be on the minutes from the Federal Reserve's latest monetary policy meeting. As a reminder, at that meeting, some Fed officials adopted a more dovish and cautious stance, leading to decreased expectations for interest rate hikes. Today's minutes may provide insights into the overall perspective of policymakers, particularly considering that they do not reflect the positive developments in the Middle East that occurred afterwards. Tighter rhetoric in the third minutes could support the dollar, while a more dovish tone might result in a weaker dollar, potentially allowing the euro and the British pound to extend gains. Turning to technical analysis, the 1-hour EUR USD chart indicates that a false breakout at 1.1429 within the context of the light macroeconomic calendar in the euro area would trigger a sell signal, potentially dragging the price down to 13.93. A break below this level would open the door for adding short positions, pulling the price down to 1.1365. and possibly extended the decline to 13.28. At this level, I would recommend looking for long positions on a rebound, counting an intraday correction of 20-30 pips. Buy entries at 13.65 and 13.98 should be considered on a false breakout. Bulls will aim to push the price back to 14.29, the midpoint of the sideways range. A break in consolidation above this level could lift the price to 14.57 with a potential for further upside toward 14.86. At this level, it would be wise to consider short positions on a rebound, targeting a move of 25-30 pips. Short entries at 14.57 and 14.29 would be appropriate following a false breakout. As for the British pound, bulls need to regain control of the 33.65 level. A false breakout at this mark, coupled with the absence of UK statistics in today's calendar, could raise selling opportunities, potentially pushing the pound down to 33.28. If the price breaks and holds below this level, sterling may decline further to 1.3298, with the bear's ultimate target set at 32.67. At this level, traders are advised to go long on a rebound, targeting an intraday correction of 20-30 pips. Long positions at 32.98 and 33.28 should be considered after a false breakout. If trading hovers around 33.65, a break and consolidation above these levels could elevate sterling back to 33.98, where sellers are likely to become more aggressive, making short positions relevant of the false breakout. If the price rises above 33.98, the pathway to 34.32 will open up. At this level, I would recommend considering short positions on the rebound, expecting a move of 25-30 pips. Best of luck to everyone.